Hey guys, welcome back to my YouTube channel. My name is Crystal Ray. I am a realtor and fitness coach here based in Phoenix, Arizona. So today is a very special day. I have a few of guest speakers that I spoke to about this podcast, which is named The Native Blueprint, Building Wealth Through Home Ownership. So today's conversation is about empowering Native families to build long-term wealth through home ownership, specifically through the HUD 184 loan program. All right, and then I just want to introduce my guest as well. I have Ardrah Sage here. She's a native loan originator and recruiter with NEXA lender. And then we have Chase Feast, who is a senior account executive with Goosehead Insurance. And I also have raewoody, who is a co-founder of Phoenix Legacy Builder. Okay, so let's start by breaking down exactly what the HUD 184 program is and why it's such a game changer for Native American families. All right, so we're going to start off with Ardrah Sage, and I'm going to give her the mic and allow her to introduce herself.
Okay, I'm going to start with a good song first. Listen to this.
I'm excited.
Some just thought you made a way. Bought a house and took it back. One by one, that's facts. Take it back.
And she native just to add. Man, you think the song about me. I know the song is about you. You.
Ardrah Sage. Reparations one home at a time.
One home at a time.
Helping to create generational wealth for all natives.
Let's take it back.
Let's take it back.
Take it back.
Love it,
Thank
love
you.
it. Yeah, welcome,
So
Ardrah.
Cool. I'm Ardrah Sage. I'm Navajo, and I grew up on the Navajo reservation in a Navajo Housing Authority home. So back then, home ownership wasn't even a conversation. You just lived where you lived, and just kind of feel like you're going to stay there your whole life. I never thought further. So it was until I had kids of my own that I realized how much I wanted to have them to have their own space to grow up in, place to play, decorate their own rooms, and really belong somewhere. So when I was living in Flagstaff, I saw this house, and it kind of started me dreaming about having my own home too. And so I remember cruising by it and saying, oh, I want that house so bad. So that's how I got into just the dream of home ownership. It always seemed like it was something that other people did. So later when I became a lender, I promised myself I would do things differently. I would educate our people to make sure that they know they're choosing what type of loan they're getting into and how each option shapes their future. So definitely taking a step out further and using my experience to help expand and help empower natives when it comes to real estate.
Wow, that's lovely. I love that. Okay. So I guess we're just going to get right into it. Okay.
Okay.
So the first question that I have for you today is, can you explain the HUD 184 program and why it was created?
Mm-hmm. Yeah, the HUD 184 loan was created by HUD Office of Native American Programs back in 1992. It's one of the only mortgage programs designed just for us, for tribal members and Alaskan Natives. It started only for housing built on tribal land, but now it's expanded. So here in Arizona, it could be used statewide on or off tribal Indian land. The idea behind it was to bridge the gap to make home ownership possible and sustainable for Native people, and to help us build generational wealth, not just generational survival.
Wow, that's beautiful. That brings us to our next question. Who qualifies and what documents and steps are needed to start the process?
Okay. To qualify, you need to be a member of a federally recognized tribe or Alaskan Native, and you have to show that you can repay the loan. So if you don't have much credit, that's okay. We can use alternative credit, rent, utilities, insurance, even a payment plan for braces is about showing consistency and being able to repay on a debt. We'll also need 2 years work or self-employment history, and about 5% total of your funds for down payment and closing costs if you're able to afford that. So many will have savings or 401k or sometimes gift from family that help with their purchase. And HUD 184 does have a down payment assistant loan program that I love, and it's not income based, but it is a repayable loan, so it's not like a forgivable grant or anything like that. Because I'm a broker with NEXA Lending, we have about 277 different banks that we broker with.
Oh, wow.
But we also correspond lend in-house too, so we have a lot of options. So I work with multiple HUD 184 lenders, and I can place your loan based on who's the best fit for your profile, especially when it comes to things like debt ratio and reserves.
Okay, perfect. That's a lot of great information there, Ardrah. So my next question is going to be, how does the down payment and credit flexibility compare to a traditional FHA or a conventional loan?
So HUD 184 beats both FHA and conventional in a few ways. The down payment for HUD 184 is 2.25% down, and there's no monthly mortgage insurance premium with that. So as compared to FHA is 3.5% down payment, and you have mortgage insurance infinitely with that loan. The only way to get rid of the MI on an FHA loan is to refinance out of that loan. And then conventional, you're looking at 3 to 5% down payment. And if you're coming in with less than 20% down, you're going to have private mortgage insurance with that loan. So that's going to be the difference between like how much money it comes in to invest it up front as a purchase loan, and also the monthly mortgage insurance premium that are attached with those other loan programs that you don't have on HUD 184. So the credit guidelines are a little bit more tight with Section 184 because we don't have that MIP. Mm-hmm. So with this loan, every collection account, regardless if it's medical or not, has to be settled. Charge-offs also have to be settled with this loan program. And if you've had any judgments in the past, they might have a little bit more seasoning time before you're eligible for that loan program. As compared to like maybe FHA and conventional, those loan programs disregard medical collections. And if you have a cumulative total collection balance less than $2,000, then they're disregarded. If it's over $2,000, then we're multiplying the cumulative collection totals by 5%, and we're adding that as a debt rate into your debt to income ratio. So, sometimes you have to decide, am I going to use this money for down payment and closing costs, or am I going to use it to pay off debt? So again, the type of debt is also important. If it's something that could be a potential lien in the future, then maybe the underwriter might still want that to be settled. Yeah. So the other big thing is charge-offs. FHA and conventional disregard charge-offs, because really what a charge-off is where the creditor wrote off that loan and has taken a loss on their tax return. So they're no longer collecting a debt. HUD 184 still wants that settled. Whereas conventional and FHA, they're willing to disregard that, write it off. It's a written off loan, so they're no longer pursuing a debt. So I would say those are the biggest two big differences between, the two guidelines on loan programs. So FHA and conventional, you might have a little bit more ease getting into because they're a little bit more lenient on some types of adverse debt. The Section 184 really wants to see clean debt as you're coming into your purchase.
Oh, wow. Okay. Perfect. That's well said. Thank you.
Yeah.
And that just comes to our last and final question. How can tribal members apply if they live off reservation land?
Okay, if you live off reservation land, that's no problem. I'd like to start with a consultation, just to have a good conversation with the potential buyer. I want to find out, how soon are you looking to purchase? What are some of your concerns? Maybe we'll talk about credit at this time to see if they need to work on a few things. And then from there, depending on where they're at, I can offer some advice. If they're looking to purchase within the next 4 months, we're going to take that next step with a loan application and also credit inquiry. So it's usually going to be a hard credit pull at that point. And credit expires usually within 120 days. So you really want to make sure you're pulling credit during the time that you actually are going to be committed to finding a house and closing within that time frame. Otherwise, we have to pull credit again later. So if they're purchasing somewhere out in the future, then there's two ways you could do that. We can have a consultation and I can kind of get a really good evaluation just based on conversation, give them some tips. Or they can go ahead and do an application and we can do a soft credit pull. And then we can really strategize because I know exactly what's on credit. I know what their scores look like. And if they're purchasing 6 to 12 months, then we can talk about a savings plan. We can talk about ways to increase their credit score. maybe we can talk about ways to reduce their debt so they can comfortably get into a home and not be kind of surprised at the last minute, like, oh my gosh, I have to take care of this and do this. So I think those are, good ways to get started. It's really about, the timing and what kind of commitment you're willing to make up front to knowing exactly how you stand with qualifying at this time. And so, some of the documents you want to have ready for that. For HUD 184, they want 2 years tax returns. Other loan programs like conventional FHA, if you're a W-2 wage earner, we don't have to ask you for your tax returns. So with this loan program, they will every time. So tax returns, W-2s for the past 2 years, pay stubs for the past 30 days, asset statements like bank statements, 401k, stock, Bitcoin can be used today too. So we want the most recent 2 months bank statements with that. And then of course your driver's license and your certificate of Indian blood or your tribal ID card. So those are going to be like the minimum basics we would need to get started.
So another question is, what's something people misunderstand about the HUD 184?
Yes, I think the biggest misunderstanding is I get people that come to me and they think it's a grant, or so people sometimes think HUD 184 is like a grant. It's not. It's a real mortgage, just one that's structured for native borrowers. So you still have to qualify, you still have to show income, and you still have to make payments. So it's different. It's not free money. And I think that's what sometimes they come to me for, like, how can you help me? I need a house. And so, but we can't help you unless you qualify. So there's still guidelines to making that work.
Yeah. Okay. That's very important. Well, wow, that was perfect. So now I just wanted to ask another question that was off of the radar.
Okay.
I would just say, what is like your more in depth of like your background? Like, what made you get into this position that you are in today?
Okay. Well, so I bought my first house here in Phoenix, and I had taken some time off from work. I was staying home, and I was refinancing on a loan. And this lady just asked me out of the blue, would you be willing to like maybe start working with us? And I was like, okay, why is she doing this? I think it's because my paperwork, I turned it in perfect.
Oh, wow.
So I was like, oh, okay. So I got offered a job to work for a mortgage broker. And back then I was like, wow, I bought this house and I don't even know how I got this loan. I don't even know how I qualified. I didn't even know how to read the title report, and I knew nothing. So I was like, well, I'm a quick learner. So that's how I got into it. I started off as a loan processor. And as I was loan processing, I was like, wow, okay, those loan originators, they make a little bit more money than I do. And they're talking directly to the clients too. I thought, well, that's something more I think I want to do. So I started going into being a loan originator. So that was scary because I was salary and I had to go to 100% commission. So that was my biggest fear, was like really trusting myself to still make money.
Yeah.
But as I got in that role, I really started reflecting on my purchase. And I was like, wow, how many natives felt like I did?
Yeah.
Like I want to have a house, but it seemed like it was such a far off idea. Like it didn't seem real or realistic for me to do. Mm-hmm. And I didn't even know where to start off, or, how do you know what bank to go to? We have credit unions, we have like, Chase and Wells Fargo and Bank of America. And then you have these mortgage companies like NEXA Mortgage. And, how do you know where to go? There's so many options.
Or who to ask.
Or even, right. And so as a first generation home buyer, I was the first one in my family to own a house to purchase outside of tribal land. I had no one to go to. I had no one to say, how does this work? And, it was kind of like really venturing into the darkness of nothing. So, and I had lots of not so great experiences in the beginning, talking with other mortgage lenders, because when I started, it was really a man's world in sales. There was no women hardly in mortgage originating. So the first man I talked to in Flagstaff, he was late for an appointment. He was playing golf, and then he just pushed paper in front of me and said, finish this and bring this, and then we'll talk. And I looked at all the stack of paper, and I was so intimidated. I was like, oh my God, what is this? So I just gave up. I was like, is this how it's going to be? If this is how it's going to be, I don't even want to do this. Yeah. So then it was when I moved to Phoenix that I tried differently again. And it wasn't the same experience. I had a lady help me, but she, again, didn't give me any guidance. She didn't ask me any questions. She just kind of told me what to do, and I just followed her instructions, and somehow I ended up with a house.
Oh, wow.
So when I reflect back on that, I was like, so many of us natives need more guidance. We need someone there who's willing to answer these questions for us and educate us about how this works. And so that's really how I came into do what I do today, and really focusing on native buyers. And I love the HUD 184 loan, but a lot of natives are also veterans, and I also offer the veteran loan. And natives today, I've been doing this over 25 years. Now we have natives that are getting into investing into real estate, rental properties and second homes. So there's a lot more loan options available for that too. So we're kind of broadening our knowledge with our native people.
Wow. Okay. I love that. Love that so much. All right. So that was well said. Thank you again, Ardrah. So now we're going to transition to, now that we talked about the lending side, let's move into what happens after someone gets approved, how to protect and insure that investment. So that leads us to Chase Feast. He is a senior account executive with Goosehead Insurance. You can help new homeowners understand what's really covered and what's not. So I just want to start off with you introducing yourselves and kind of where you started and where you, I guess, how you got to this position today.
For sure. Thanks, Krista. Thank you, Ardrah, for all that. That was some great information. So, super excited to be here. Kind of as Krista said, I'm a senior account executive with Goosehead Insurance. So I'm super excited to be here today. Pretty much what I do, I'm an insurance broker. So I work with over 60 carriers here in Arizona alone. I am licensed in other states such as like Texas, Delaware, Nebraska, and our team and company is, licensed across the country. But pretty much kind of how I got here today, always kind of thought and wondered, about insurance. So as I went through school, I got my finance degree, and then I'm from Omaha, Nebraska. So I had initially wanted to move back. So kind of after school wrapped up, got my degree, moved back to Omaha, Nebraska, and then actually got my real estate license. So ended up, definitely didn't love what I was doing there. Really the main thing though was I wanted to be back here in Arizona. So really missed it. So I ended up coming out here and kind of just jumping straight into insurance. So that's kind of how I got here today. So I'm, once again, super excited to be here, and hopefully I'll be able to offer some good insights.
Yeah. Okay. Thank you so much. And it's nice having you here as well.
Thank you.
I know I met you and Tess at a Native American, what was it called again?
Native American Real Estate Circle.
Yeah, perfect. You guys just brought such great energy, and honestly, I was in loss of hope in the real estate world because I didn't know there was other Native Americans or just help and guidance and just people who are in the same field as me. So I think that was pretty good.
Absolutely.
Yeah, I'm so glad I met you guys. All right, but so we're gonna get into the questions. So my first question is, when does home insurance come into play during the buying process?
Yeah, no, for sure. So I would say, when you're working with, your loan officer, I would say the insurance should always be something that's on the radar kind of after you're getting, pre-approved. You kind of want to have a, some sort of game plan of where you're going to go and, kind of what you're going to want to do with the insurance. So the insurance premium will affect your debt to income ratio with your lender, kind of like Ardrah mentioned earlier. So it's really important that you're at least thinking about this, and, depending on, how tight things are, and, getting into the loan or the loan program that you're working with, you're going to want to make sure that you're thinking about insurance. So typically what I tell people is, if you are in one of those, tighter situations, you might have a, bit more tight debt to income ratio, looking at insurance and, potentially even getting an insurance quote might be something that you want to do before you even put an offer in, right? Depending on where that insurance premium comes back, that could potentially disqualify you from the purchase of that home. So if you don't do it then, typically what I recommend is, as soon as you do get under contract on a home, you should definitely reach out and, get some sort of insurance quote. If it, works with everything with the loan, then, fantastic. So definitely something that you're going to want to have, and your lender's also going to require it. So.
Okay, perfect. Wonderful. All right, so that just leads us into the next question. Why is insurance required for most homeowners?
Yeah, no, for sure. So insurance is going to be required for any homeowners who have a mortgage or a loan on their property, right? So the lender is going to want to have that insurance policy in hand. They're going to want to see some sort of, evidence of insurance. Reason being is obviously, the lender is providing the loan. They're putting a very large, investment in sum of money to you as the borrower, right? So they're going to want to make sure that their investment is also protected. So that's, typically why insurance is going to be required for most buyers. I definitely do recommend, if you are in a situation where you might not have a mortgage or you might not need a mortgage, insurance is definitely not required, but it's definitely, something that I would highly recommend. For most people, their home is their biggest asset. So you want to make sure that you're properly covering and protecting that.
Yes. It's so funny. I don't know why I just thought buying a home was you sign a piece of paper, send the money over. I never thought of home insurance.
Yeah.
It just poofed.
Well,
so.
And that's honestly something that most people don't think about. Most people kind of miss it, or, I'll have people that come to me and they're like, oh my God, my lender keeps bugging me. I don't understand, even why I need this insurance right now. Like I haven't even closed on the home. Like the house isn't even mine yet. Right.
Yeah.
But no, it is a very normal thing. And, Ardrah, I'm sure you've probably heard that from some of your clients.
Yes. The other thing I want to bring up too, when I have a new purchase buyer, I try to get them to get insurance as soon as, sometimes they're even getting quotes before, because different properties, sometimes you might have a homeowner who's got claims on their property. We had one where they had a water claim. I think that's what we had. And her premium was really high. And so I sent the premium over to Chase because I was doing a refinance. I said, is there any way we can lessen the premium? Well, because there was a water claim on there, he even had a hard time bringing that premium down too much. So sometimes you might find a house, it looks all pretty on the outside, and then you go and get insurance, and then the premium is crazy high, and now your debt ratio is too high for the loan. So the home insurance can really change that right away up front and make it where you can't qualify. So you want to know that right away.
Yeah, it can definitely make a very huge impact on things, which is something that, once again, most people don't consider. So, like Ardrah said, stuff like, past claims, those are definitely going to be a huge factor on your premium. Past water claims are one of the hardest things that we deal with. A lot of carriers don't even provide coverage or offer, any sort of policies to people who, may have a past water claim. So that already, kind of limits the products that we can offer. Along with that, depending on the zip code that you're in, how high of a risk it is, what their, crime rate might be. That's all going to play a factor into the rate. There's another fun thing that, most people don't know. There's something called an insurance score. So it kind of works similar to a credit score for insurance, right?
Oh, wow, okay.
Yeah. So you could have, a, brand new home, perfect borrower, perfect credit. But, if they have a terrible insurance score, you could see a very high premium with that. So, some carriers, they look at that a little bit different than other carriers. So to me, that's the importance of working with a broker, right? So every carrier looks at things a little bit differently.
Mm-hmm. All right, perfect. That was well said. All right, so that's going to lead us into our next question. What are some common risks new homeowners face without property coverage?
Yeah. The typical risks you think, right? And you think pipe bursting, there's a rainstorm, right? And you get a leak through your roof, or, maybe there's some other sort of storm with high winds, there could be potential damage to the roof. Here in Arizona, we do have a lot of areas that definitely are much higher of a fire risk. So that's probably one of the hardest things that we see here in Arizona, especially in, rural areas, is, that fire risk. Right. So a lot of carriers won't even take that risk. So, really the biggest thing to look out for is, some companies, may provide coverage, but they might try to exclude some sort of fire coverage. Right. Definitely, you want to definitely avoid that at all costs. Most likely if your lender finds out about that, they're not going to be very happy as well. So, definitely some stuff to look out for. The other thing is there's a couple different types of water coverage here in Arizona that we see on, homeowners insurance. So in other states, there's a couple of others, but the two main ones that we see here in Arizona is, first of all, any sort of like sudden and accidental water coverage. So you think if like a pipe burst or, kind of like I said earlier, there's a leak through the roof or something like that, that would be considered some sort of sudden and accidental water damage. So depending on, the different risk factors that these carriers look at, such as high fire risk or, past claims, oftentimes they will limit that coverage or, potentially not offer it. Right. Mm-hmm. So that's definitely something, to look out for. So, we have carriers that if there is a past water claim, they'll only cover, anything like that up to 10 grand, where the typical policy, will cover that fully, up to the dwelling limit on the policy. So that's something to look out for. And then water backup, you think of like the sewer or the sump or anything like that backing up into the home. Surprisingly, that's always a coverage that has to be added to your homeowner's insurance policy. That's something that, isn't just covered, right? So definitely, look out for that. Make sure that your policy does have that on it. And then really the other type of coverage that I would tell my clients to look out for would be some sort of like service lines coverage. So, think of the underground service lines running underneath the property. If there's some sort of, failure with those, then, very well, that could be something that's not included on the policy unless it's specifically endorsed.
All right. So I probably gave you the most questions. I'm so sorry.
No, you're fine.
But it's very important. Our next question is going to be, what does the standard home insurance policy usually covered?
Yeah. So typically with the standard homeowners insurance policy, you're typically going to see that written on a standard home insurance form. Typically that's called an HO3 form. So that's pretty much homeowners insurance in insurance terminology, right? So with that being said, we're typically going to have coverages A through F as well as your policy deductible. Those are the main things, right? Coverages A through F, there's a couple different, different types of property coverage, liability coverages, and then obviously we've got our, deductible. With deductibles, I always tell people, make sure that that's something that you're looking at on the policy. You want it to be, a number that you're comfortable with, should something happen, right? So I'll kind of jump into like coverages A through F. Typically, our coverage A is going to be our main dwelling coverage. So that's going to cover the actual physical structure of the home. So that's obviously going to be, included on a typical home insurance policy. The next thing would be coverage B. That's going to be any sort of like any sort of other structures. So think any detached storage sheds, detached fences, detached garages on the property. That's typically going to be covered under your other structures coverage. Okay. And then we've got our coverage C. That's going to be our personal property coverage. So I always tell my clients, think of, everything you're putting inside of the home, right? Furniture, clothing, appliances, all that good stuff. Kind of something I use typically to explain that is if you take the roof off your home and flip it upside down, typically everything that falls out is going to be personal property, right? Mm-hmm. So you think of, should something happen, right? If there's some sort of fire or something else that displaces you from the home, that's kind of where our coverage D is going to come into play. That's a loss of use coverage. Sometimes they'll also refer to it as like an additional living expense coverage. But really what that means is that, should something happen, right? Let's just say, worst case scenario, house burns down, right? Should at that point you need to go get some sort of rental or Airbnb or whatever other additional expenses that you may incur due to that covered loss, typically your homeowner's insurance policy is going to cover those additional expenses for you. That brings me to our liability coverages E and F. Typically we're going to have some sort of personal liability coverage. So pretty much what that means is think if, somebody came over, something happened at the home, somebody tried to sue you, maybe somebody like falls, and hits their head on the pool, cracks it open, God forbid what could happen from that. But if they try to sue you, typically there's some sort of liability coverage that's going to cover you on your policy, right? And then really the last standard of coverage that we're going to see is going to be our coverage F, medical payments coverage. So I always explain to my clients, it's kind of a smaller form of liability. If a friend or a neighbor, comes over, maybe they trip and fall, have to get a couple stitches. Typically that medical payments coverage is the fastest thing to leave the policy. So that can be used to pay for any small healthcare deductibles, small medical bills, all that type of good stuff. So those are our core coverages. Pretty much everything else that we see on the policy, such as like the water backup coverage that I mentioned earlier. There's some other endorsements as well that I typically recommend, such as the service lines coverage. Those are all going to have to be added to the policy.
Okay, wow.
Yeah.
I love that it has like A, B, C, D, E, F, G.
I know.
Like that just makes it so, I just love that. I love
Makes it
organization.
Yeah, it's
Got
definitely more
educated.
organized. It's
Yeah.
standard. They're all standard forms. So,
Okay,
yeah,
perfect.
yeah.
You just got that down. Love it. All right. So the next question is going to be, what do first-time buyers often overlook when it comes to insurance?
Yeah. One thing I hear a ton is, when I'm, working with a first time home buyer, kind of going over their, policy and coverages, something that surprises a lot of people is flood, right? So flood is always excluded on homeowners insurance, right? The thing is, most people aren't familiar with what a flood means, right? They think a flood is like if, a pipe burst, or if there was a leak in the ceiling, kind of like I've, mentioned here before. But really what a flood is considered by definition is 2 or more acres of rising water or 2 or more residential properties underwater, right?
Okay.
So yeah, typically that's going to be something that a lot of first-time home buyers are going to overlook. If you are in a high-risk flood zone, your lender is going to require you to have some sort of flood insurance in place on the property, right? There's a couple different types of flood insurance. There's public flood insurance, there's private flood insurance. So I won't bore you too much with those, but that's definitely something that a lot of people overlook. So yeah.
So moving on to our next and final question, how can the right coverage protect a homeowner's investment long term?
Yeah, for sure. So, kind of like Ardrah said, a big thing and, getting into a home is, building generational wealth, right? So, really that's why your insurance policy is in place, right? So, like I mentioned earlier, you're not required to have insurance coverage if you don't have a mortgage on the home, but it's definitely, something that at least, if I was in that situation, I would want to have, right? So, it really protects your asset, right? And most of the time that's, somebody's largest asset. So, should something happen, if there was some sort of fire, right, and you didn't have the, proper coverage in place, then you would be, screwed, right? So that's definitely something very important, right? Also think of all the stuff and the valuable items that many people have inside their homes, right? There's just a lot of important things with insurance, right? You never know what's going to happen. We all hope that we'll never have to use our insurance policy, but it's really the main point of it is to protect your long-term assets. So
Yeah, that makes sense.
yeah.
Okay, yeah. Do you have anything you want to add on to that?
No,
Yeah?
that's
Okay,
so
I know, well spoken. It was like A,
Thank
B,
you.
to C, and done. I love it. All right, so now, thank you again, Chase.
Yeah, thank you.
I appreciate it so much. So the next thing we're going to transition to, since we've talked about getting approved and protecting your home, now let's talk about preparing financially and building legacy. So, beside me here, we have raewoody, who is the co-founder of Phoenix Legacy Builders. Your focus is helping families strengthen their financial foundations and create general wealth.
Yes.
Yeah, so I'm going to give you the mic as well. I'm going to have you introduce yourself and kind of tell us a little bit about
Sure.
how you started and about yourself.
Definitely. I appreciate Audrey and I appreciate Chase for all of the information that you provided, and thank you for welcoming here today. I've actually stepped in for my business partner, Josh Lucio, so I really appreciate him too allowing me to be here. Well, I'm raewoody. I'm originally from Tuba City, Arizona, but I lived here in the Valley for over 27 years. So being familiar from back home reservation life to coming into the city, you play two parts, you know what I mean? So I think that's the general reason why I got into the business of, I've had questions, like same kinds of questions that with Audrey, same kinds of questions as you, but like, where does someone coming off from a small town I know what I want, but how do I get there? That's
Right.
that's the roadmap. That's where we figured, we have to figure that out. And I think with Audrey here, has that same mindset initially when she started out too. Like, how do I get there? What's the roadmap? There was really no one guiding us. So where do I do? And looking at Chase's story of how did you get into it and stuff like that, it brought in my mind to be like, hey, we need to at least think outside the box. If no one's going to come looking for us in our communities, we need to create being that person and going out there to be that forefront for them. So that's a little bit of what about myself. I do come from the medical coding world. So this was all foreign to me too as well. But I'm a business owner and I've been in business for 5 years. I really love what I do. I help people build generational wealth and build the family legacies, anywhere from single families, single person to business owners as well.
Yeah.
So it's a whole broad spectrum. So
Yeah. Okay. Perfect. Yeah. So I was researching and I saw your guys' program and I thought I was like, wow, there's actually Native Americans doing this out here. Like,
Yes.
I never thought I would see it at all. I have a few questions for you.
Sure.
Going off that note. So the first question is going to be, what should Native families do to prepare financially before applying for the HUD 184 loan?
I know Audrey touched on some of that information already, but I'm just going to repeat it because it's standard across the board in regards to your financial standing, your foundation, okay, your financial standpoint. Stabilized income, obviously, building that savings, knowing that you're preparing to purchase a home, we all want the big mansion. We all want, the bigger, the better. We all want in the best neighborhood, right? But then in reality comes and checks in with us, right? Be like, okay, well, your income, your savings, even your savings in the whole process of, are you a saver? That's a hard question. Sometimes people can't even answer, no, I'm crazy on Amazon, or I go on shopping sprees, and just those things, those come into place as just the basics of, are you saving now? Are you prepared for that? Because that's a commitment. That's a whole relationship with the home, long term, especially if you want to pass that down for your families.
Yes.
Or, just the generational wealth part. Also, gather your documents. How many of us in this room know where our documents are?
I do. My mom.
Right? Are they all in one
it.
pile, or are
Probably
they
not.
scattered in different places? Right? Even that simple question is where are your documents?
Yeah.
Can you come into your home and be able to have those prepared? But definitely being organized about that, because you can have them in different places, especially if you're moving all the time, right? That the documents could be in different places. Having refreshed copies, because I've had someone who's come where they're tatted and everything, and they're not legible. Obviously reprint them or request for new documents for sure, because that needs to be updated and fresh for them to be able to easy scan in for other places, right? Understanding your eligibility. Like I mentioned, Audrey, we want this big mansion, we want this best neighborhood, all of this stuff, but your eligibility determines that as well. We don't like to say, well, this person is worth this much. But it comes down to that, basically, of knowing, okay, what is your financial worth? Understanding that. But you want to be here, but how do we get there? Let's prepare you for those steps first. You can't just jump over. We wish we could. Sometimes some people do, right? But starting out at a standpoint. But yes, you can get up to that level. But these are certain steps that you have to take, being prepared for that. Reducing your debt as well, understanding your debt, because some people can be like, oh yeah, I know it's there, but not understanding why it's there, having to prepare to get rid of it, right? Having to fix it, not just being like, oh, I'll just pay them off, but understanding the logistics of how you got there is so important too. Knowing why we're in this debt area. Where, oh yeah, I'll just pay it off, get rid of it, and then it's behind us.
Yeah.
Because it could come back to haunt you, especially when you're purchasing a home.
Their second question is going to be, how does home ownership fit into building generational wealth?
Well, it definitely is. It builds equity over time, but also educate yourself on that equity as well. How, why? So those are some questions that, on top of what you're preparing for, have the other questions set up too as well. And I think that with Audrey and Chase too as well, we appreciate our clients who ask questions.
For
right?
sure.
We initiate the questions as well, because we've been in those positions. We've been there in those areas. It will provide a stable asset. And I know that it could be someone coming from back home a little nervous about the long-term commitment. We're scary about commitments, right?
Oh,
For sure. I think that's that commitment altogether.
In general, right? Chase is like, we're veering off in a whole different area, but let's stay focused. But I think commitment is a huge, scary area to be in. But knowing that if you're stabilized with your financial foundation overall, it sets you to be prepared for those areas automatically. Everything should fall into place. So being prepared with that foundation initially, it benefits and appreciates depreciation over time. It really benefits you, especially if you're wanting to leave it for your children or using it as an investment property, leaving it for the next generation or for them to be able to do whatever they need to.
Okay. Yeah, very well said. So that leads us into our next question. How do you recommend clients manage credit or debt before starting the process?
Definitely look at your credit reports. I know you touched on a lot of these already, but looking at your credit report, not just even if you're buying a home. I think in general, as a financial professional, just knowing what your credit score is. There's so many free apps out there, but there also is, take advantage of purchasing one of the apps on a regular basis to remind you. I have a set reminder on my phone that says, hey, check your credit report. I may not have purchased anything big or lapsed on anything, but it's just always good to know that, hey, there's no discrepancies anywhere. Because there was one that showed up on mine and my husband's was perfectly fine. But just being aware of those, just being like on a regular basis, even young adults, where do you even start out with understanding credit? Because 18 years old, 19 years old, you can initially start by preparing and getting your credit score ready. Being educated on it. How many of our college people that we know that instantly fill out all these credit cards? Right?
I did.
Like, like
you're like, what? We have to pay it?
We have to pay this back, and then even the cost of everything going up. So that's when your interest goes up. Do you understand the interest rates on your credit cards? That's huge. The credit cards anywhere from 15 to 25%, and that says it in fine print right on your statement. And people miss that on a regular basis. Like, you didn't understand the additional that $50 charge at Old Navy. An additional finance charge is going to be added on that, especially even if you lapse paying it.
They probably didn't read it.
They normally don't. But my thing is like always look at that.
Yeah.
But, being part of the programs that we help our clients with, the mindset of knowing that there's a credit card, I don't have any worries. If there's an emergency, that's what we're going to utilize, right?
Right.
That's the typical mindset, right? Whereas we have to shift them into the mindset of like, you have your checking, you have your savings, you have your credit access here. Let's try not to utilize any of those in emergencies. Create an emergency fund.
Right.
Have an emergency fund where it's strictly emergencies, right? And so you're not utilizing, do I choose my mortgage payment versus this AC that just went out? You know what I mean? So, but having the savings separate too as well. Like you do need cash in your savings account to utilize for whatever, maybe vacation or prepare for a vacation or whatever the extra stuff. But the emergency fund strictly for emergencies. Right? Understanding the mindset of like, we need this separately for emergencies. Mm-hmm. How many of us have ran into emergencies? We all do, right? So emergency fund, definitely separate just for emergencies, so.
Okay,
Cool.
All right, perfect. All right, so that just leads us into our next question. For families who've never owned a home, how can they budget for hidden costs like taxes, insurance, or repairs?
Just like I mentioned, emergency funds, educating yourselves on all of the different steps of like, okay, this is going to cost the insurance portions of it, getting prepared with your monthly expenses overall, because if you're transitioning from an apartment, right, rent still has to be paid for in the process of purchasing your home, because you'd never know if that process is going to take longer than 30 days, 4 months, or even a whole year, because sometimes it happens in that manner. I say that because that's happened to us, to where, okay, we're ready to buy a new home. We had to wait 3 years, just because we wanted to make sure that we did it properly. We had the right amount of down payment. We had the right amount of credit, debt to ratio, everything, like easily fixes that we needed to fix. But we waited for 3 years to be like patient. Even though we're a growing family and everything, it was just so important. Like, yes, educate yourself up front. Know the steps. Speak with certified, licensed people for sure. Ask the questions, definitely, of getting prepared for it, and then preparing enough ahead of time, knowing that your current situation here for your finances emergency funds, and then other extensive, like your children heading off to college or preparing for the school year, any of those being prepared ahead of time. So 6 to 12 months of just being financially prepared for it. Having initial conversations with the lender, a mortgage representative, insurance companies, just definitely being set for that.
Yeah, perfect. Okay. The last question is going to be about what are some common mistakes to avoid during this journey?
Common mistakes, I think, was I would say just not knowing your financial worth overall.
Yeah.
Not understanding your financial worth, how much you're worth to your husband, how much you're worth to your children overall. Just that foundation of knowing that portion, knowing your there's just so much. Looking at all of the expenses, property taxes on those different realms. I know Chase touched on a little area of, Westgate sounded like a great idea when we initially moved there, and we were moving there just for a football team. And now all of these things are around us. And that makes me want to contact my insurance company in regards to, like, there's so many stores now, and the cost of living has gone up in our general area just for all of these event stuff going on here, and then the dangers as well, right? How much, the crime rate in your area. There wasn't much then, but now there is, and it's just like you have to be prepared for that. Being definitely prepared for that. The homeowners insurance is definitely one of them. Knowing that portion. I know that with our state licenses as well, we're insurance brokers as well. We handle more of the mortgage insurance,
right?
Mortgage insurance overall, and I know that a lot of people get nervous about life insurance. It's a taboo in some Native American cultures as well, and me being Native American. I just feel that it's just so important to educate yourselves on it because we can get the taboos. But I try to look past that because I know how important my children are.
Right.
We get insurance on our phones. We get insurance on our vehicles.
Cars,
We get our insurance on our homes, all of that stuff. But the main person is yourself. Right. And anything could happen. I told you I came from a medical background, a medical coding background. So I've seen, heard it, anything can happen. I'm not a worry bug, but it's just like, it's interesting when you that can happen.
You never expect or think of it until it happens.
This has been such an empowering conversation. But before we wrap it up, I'd love to hear a final takeaway from you guys each. Just like a piece of advice or anything else you want to leave off, a good note, or any advice for me, because it's my first podcast ever.
Yeah.
So.
I mean, the biggest takeaway is just, reach out and get the process started, right? Talk to someone. Maybe today isn't, the right day or, the right month or year for you to get into a home, but, you can, with the right resources and contacts, you can, figure out what you need to do to get to that point. So, very much so like Tess said, you're waiting for the perfect time and the perfect house and, it's not end all be all, right? If you can, afford to buy, personally, I say, buy, start building equity. 5 years down the line, you take that equity from, your original home. Maybe you want to, rent that out. You can refinance it, and Tess could go over this a lot more. But just buy now if you can. Right? Don't wait. So
So homeownership isn't just about having a key. It's about stability, healing, and legacy. Studies show that kids that grow up in a home that's owned are better at graduating from high school and going into college, less drug use, less teen pregnancy. So that's huge for us. And also, my mission is expanded more than just home ownership. I'm really trying to expand into bringing other natives into real estate careers. And whether that's real estate, lending, title, insurance, all those different aspects. So for me, homeownership is freedom. It's creating roots and legacy for our children. The HUD 184 loan is one of the most powerful ways we can reclaim that right to own, build, and thrive in our native communities.
Touching base with both of those statements there, just knowing your financial worth overall. starting from that point, writing down your questions, because how many times, I have this question for this person.
Yeah.
I have this
Just ask
question
the
for
questions.
Just ask the questions, definitely find someone who is licensed and certified as well. You're not going to ask your cousin who's never purchased a home before.
Oh, yeah.
We
That
always get
happens
that,
so
right?
much.
Like, hey, educate yourself about your credit. You're not going to ask the person who's high in debt here, because they're probably wanting to know those same answers as well.
Yeah.
Get someone who knows this information. And definitely don't be intimidated by just asking the simplest of questions, because that's where you start. That's where you start bridging the gaps. Ask the questions, because we're always open to all the answers, because we've been there. That's the
Yeah.
beauty about it, is that we've been there. We've been in those situations to be like, hey, what about this? What about this scenario? Don't whisper it, shout it, because other people around you might want to know.
Yeah. Yeah.
It's very helpful and useful information to just be supportive of one another, having each other's back in this world.
That's very true.
Absolutely. We need more of that.
Yes.
For sure.
For sure. All right. Well, I guess that kind of wraps everything up. I just want to thank each and every one of you guys for coming up. Ardrah, Chase, and Ray. It really means a lot to me, because, like I said, it's my first time ever doing this. And I do feel like this is going to change many people's lives
Absolutely.
in the near future. But yeah, I love to work with you guys again for sure on different topics. Guess we're gonna end off there.
Yeah.
I have like a little call to
Perfect.
action. So basically, if you're a native family thinking about buying a home, or want to learn more about the HUD 184 program, reach out to any of our guests here, or connect with us on social media or me. And I'll also have the links down in our caption below. And then I'm ending off again with another line. But this is the native blueprint. The native blueprint. Let me start over. Mm-hmm. Okay, this is a native blueprint. Blueprint.
The res is
I
coming
think we
in.
should leave this part in.
No.
Don't say boop.
Blueprint.
How many people will be in there?
Oh my goodness. No, it actually might be my native tongue. Like sometimes it slips out.
Yeah.
I'm not gonna lie. Okay. And scene. This is a native blueprint, and I'm Krista Ray. Thank you for tuning in, and remember, your home is the foundation of your legacy. Perfect.
Thanks, Krista.
Yeah. Thank you, Krista.
Thank you. All right, and cut and scene.